Hi again everyone, and welcome back to the channel. As those that have been following my channel for a little while will know, I often dedicate parts of videos around stocks to looking at short squeeze candidates. Targeting stocks for potential short squeezes has been an increasing tactic used for making quick money in recent times. Sometimes the stocks being targeted have actually been decent companies with sound fundamentals such as Marin Software and right now BBIG or Vinco Ventures. Others not so much, support.com. However, in the last couple of months, there is one stock that has dominated the fintel list for a potential short squeeze, and that is Progenity Inc, ticker symbol PROG. So in this video, I intend to scratch below the surface of this short squeeze play just a little and give my thoughts on the stock and whether or not I believe this is a good play. To start with, to give a little context, this stock IPO'd last year in June at $14 a share and has in recent times traded below the $1 mark. So if you've been a stockholder of Progenity since day one, it has not been a fun ride. So there have been several financial decisions taken by the company which have led to this capitulation of the stock price. Perhaps none more so than the numerous equity raisings Progenity has embarked on since going public 15 months ago, with $60 million being raised in the past 3 months alone at a decreased share price. It was just before the October equity raise that PROG began being targeted as a short squeeze candidate. The company has also made a strategic decision to move away from the production of one of their prenatal testing kits, which was one of the products they actually did derive income from. The rationale behind doing so was so the company could focus on researching and developing other products they have in their pipeline. The fact that this decision freed up about 70% of operating expenditure suggests that the product was consuming a lot of energy and resources for the company, and they were judging as not delivering acceptable returns. I have a theory for why they may have abandoned this product to pursue other projects. So while the idea of having a non-invasive test seems quite appealing, I can imagine women who are having children are not too keen on being what they perceive as the guinea pigs for these tests and will prefer to stick with the more tried and true blood test. And when you factor in that less women are having less kids, there is likely going to be a slower uptake of these tests, thus hampering potential revenue. Make no mistake, this is a very high risk move to cut off a slow growth revenue stream by the company, as this will accelerate their cash burn rate. I'm guessing the company is betting on one of their other products coming to market to experience success soon, which may very well happen. But clearly this is a company that has not yet had the product success they envisioned, and I think this shift in product focus is a reflection of Progenity betting that they are near a breakthrough. If their next release is a miss, however, I would expect to see further equity raising and greater financial strain on the company, thus further dilution of shares. So not a good thing. What that product release could be does seem foggy at this point. There was a little bit of excitement for the stock recently when they had a further 4 patents accepted and approved by the patent office, but registering a patent is no guarantee of a product coming to market or coming to market in a profitable way. Now, in terms of financials, PROG has very weak numbers. Based on their last quarter results, they had a negative tangible book value of $1.70 per share and posted a loss of 65 cents per share for that quarter. If you look at that figure over 12 months, the company has actually amassed losses of $3.47 per share, although some of those losses would be worked out on less diluted shares. So these numbers are not surprising given that this is a new business that is pinning its fortunes to the potential of their R&D. But in relation to the current share value, these numbers are quite bleak and make me believe that there could really be a cap on how high a short squeeze for this stock could potentially run. So for me, if I was playing the short squeeze, I would not want to be holding this stock based on these numbers, expecting it to go up to like GameStop levels, and would be mindful that the weak fundamentals could be limiting to how much higher the stock can actually go. Of course, however, the company is set to release their latest September quarter results on the 4th of November, and this could be the catalyst for the next major move in this short squeeze play. In terms of the short squeeze action from a technical perspective, we can see that the rally for the stock really started to take off in the closing moments of September, where it jumped from about 90 cents to over $2 per share. The effort was clearly hurt by the announcement of the $20 million equity raise on the 4th of October, which would have likely seen a number of short sellers jump back on the stock in an attempt to take advantage of this dilution effect. However, in true short squeeze fashion, news of patent approval earlier this week reignited the rally and has seen the stock trade at fresh highs for the month. Since the peak of the most recent rally, we have seen an almost perfect short-term wedge forming with a series of lower highs and higher lows coming to a convergence or breakout point. A thesis that is clearly indicated within the shrinking Bollinger Band range. In terms of direction of a breakout, the RSI is not giving much indication, having traded fairly neutrally since the last major rally. This could potentially mean that barring any news catalyst, we may see the stock continue to move sideways when trade resumes on Monday. But really, when the stock is performing in such a turbulent way, it's anyone's guess. Obviously, Progenity has some fairly attractive shorts related data underpinning it, since it's the #1 short squeeze candidate on fintel. I think chief among this data is the extremely low days to cover and the high borrow fee. These figures put a greater level of pressure on short sellers to get out of their positions when under distress. When you factor in that the stock is still at such a low price and has a very small market cap, this is a stock that can easily be taken over and held through a loosely coordinated effort by retail investors if they choose to, which can then give rise to crazy sharp upward price action if realized. Herein lays the attraction for this play. I'm not advising to invest or not invest in this, but given the current lows, I am personally tempted to throw a small amount of money into the stock. Maybe stake a 500 share investment just to see where it can go. That technical convergence I showed you just before makes me believe that another short-term breakout could be approaching, and given the fact that this current share price is only about 1/3 of the stock's year-to-date high, I think there is some definitive firepower potential behind it. If I'm left holding the stock, I won't feel too bad, as I will be putting a large percentage of my portfolio into this, and as the kids say, YOLO. Anyway, what do you guys think about the stock? Will there be a continued rally? Where do you see the stock price moving to? Let me know in the comments below. Until next time everyone, may the markets trade in your favour. Cheers.